This was never just mud, trenches, and screaming artillery. The First World War was not only men charging into machine gun fire or bodies caught in barbed wire. It was also a silent financial war. It was fought in vaults, in ministries of finance, inside central banks, and in tall offices where men in dark suits moved numbers instead of troops. The soldiers paid with blood. The bankers and governments paid with credit. And the choices they made between 1914 and 1918 did more than decide victory. They rewired the global money system in a way that still shapes how you live right now. If you think war is only rifles, flags, and speeches in Parliament, you are missing one of the deadliest weapons on Earth. World War I proved that money can be militarized. Debt itself can be turned into a weapon. Control of credit can wound deeper than artillery, because it keeps doing damage long after the last cannon falls silent. So, let's rewind to the summer of 1914. Europe is a powder keg. Empires hate each other. Alliances lock nations into automatic retaliation. Politicians shout about honor. Newspapers promise the boys will be home by Christmas. Generals swear it will be a short war. But behind all the theater sits one cold fact. You cannot fight a modern industrial war without unimaginable spending. You need rifles, shells, fuel, steel, trains, uniforms, horses, trucks, ships, food, hospitals, pensions, and constant replacements. Millions of men are pulled out of factories and fields and turned into soldiers. Their lost labor still has to be replaced. Weapons have to be produced faster than they are destroyed every day. None of that is cheap. None of that is optional. Here is the part leaders almost never said out loud. Choosing war meant choosing debt. Every empire that marched to the front line was also marching its civilians into a future of financial burden. At the beginning, most governments comforted themselves with a beautiful lie. The war would be fast. The cost would be manageable. They would pay with gold in the vault, a little borrowing, some patriotic donations, some new taxes. A few tough months, and then victory. That illusion exploded in weeks. The money burn rate was like nothing the world had ever seen. Budgets evaporated. Daily costs were counted in tens of millions. The armies were devouring cash faster than shells. Very quickly, the old financial rules of Europe began to crack, because the pre-war system had been built on discipline. And the core of that discipline was the gold standard. In 1914, most major powers were still officially on gold. That meant paper money was supposed to be honest. You could, in theory, walk into a bank and trade notes for a fixed amount of physical gold. That promise gave a currency credibility. It said to citizens and foreign lenders, this bill is backed by metal, not just by words. But the same promise also handcuffed governments. Gold reserves are finite. You cannot print oceans of new paper to feed an endless total war and still pretend every note is convertible into metal on demand. Britain, France, Germany, and Russia all had gold. But once millions of men were mobilized and factories stopped making consumer goods and started making guns, shells, and explosives, costs shot straight up. Germany was spending more than 10 million marks per day by late 1914. Britain's daily bills soon hit £2.5 million. And that was still the early stage. Anyone doing basic arithmetic could see the truth. The gold would not last if the war dragged on. So governments did something radical. Quietly, step by step, they suspended the rules. Convertibility into gold was limited, delayed, or basically canceled. One by one, the great powers either abandoned the gold standard outright or poked so many holes in it that it barely existed. Money stopped being as good as gold and became as good as the government's promise to survive. They did not shout this to the public. Panic is bad for morale, but insiders understood. The anchor had been cut. That moment was not a technical footnote. It was a revolution. Money was no longer chained to metal. It was now chained to politics, persuasion, and fear. Central banks tasted a new kind of freedom. They learned that in a big enough emergency, limits can be rewritten. Printing presses can replace gold mines. Patriotism can replace taxation. Illusion can replace balance. From there, the financial war really began. Start with Germany. The British naval blockade choked Germany's trade and cut access to world credit. Berlin could not borrow easily on global markets, so the government turned inward. It launched huge war loan drives targeted at regular citizens. Posters flooded the streets. lend to the fatherland. Housewives were told to convert savings into bonds. Workers were told buying bonds was as heroic as fighting in uniform. Children collected coins. Churches preached duty. In total, Germany raised more than 100 billion marks from its own people. On paper, that sounds like national unity. In reality, it was a giant bet on victory. When Germany lost, that bet collapsed. War bonds crashed in value. Families who had done their duty watched their savings evaporate. That feeling, we sacrificed and we were betrayed, did not disappear. It fermented. Rage sat in the bloodstream of the defeated society, waiting for someone to weaponize it. Now, look at Britain. Britain faced the same basic math, but it started with an enormous advantage. London was the center of global finance before the war. The pound sterling was trusted worldwide. British banks had clients on every continent. At first, the British government leaned on patriotic borrowing at home and short-term debt. But soon it reached for something Germany could not access at scale: foreign credit, especially American credit, which brings us to the United States. In 1914, the United States was officially neutral. Washington said, "We are not in the war." Wall Street quietly said, "Maybe not with soldiers yet, but definitely with money." American banking houses, especially J.P. Morgan & Co., acted as purchasing agents for Britain and France. They arranged massive loans. They coordinated orders for rifles, shells, uniforms, copper, oil, food, and machinery from U.S. suppliers. They kept Allied industry alive. By the time the United States formally entered the war in 1917, American finance had already been fighting for years. And this was not charity, it was power and profit. American banks earned huge fees. American factories ran nonstop. American farms shipped mountains of grain. The effect was transformational. Before the war, the United States often borrowed from Europe. After only a few years of lending to Europe, it emerged as the world's leading creditor. If you ever wondered how the so-called American century really began, it started in the ledgers, not just on the battlefield. France had its own version of the struggle. The French state was already burdened by the memory of defeat in the Franco-Prussian War and had invested heavily in fortifications and heavy guns before 1914. When total war hit, Paris leaned on domestic savers and foreign lenders. The French public had a deep habit of buying government bonds, and the state played that card aggressively, framing it as patriotic duty. But even that was not enough. France, like Britain, became increasingly dependent on American capital. That dependency would shape French politics after the war, because paying it back would become its own political crisis. Then there was Russia. Imperial Russia looked intimidating on paper. Huge landmass, huge army, serious gold reserves. But beneath the surface, the system was fragile. Industry lagged behind the West. Railroads were stretched. The financial system was shaky. To fund its war effort, the Tsarist government borrowed heavily from its allies, especially France, and printed aggressively. The result was brutal and predictable. Prices surged. The ruble lost credibility. Food shortages got worse. Wages failed to keep up. Anger exploded in the streets. By 1917, the Russian economy was collapsing, and when the money system cracked, the political system cracked with it. The fall of the Romanov dynasty was not just ideology, it was also financial breakdown. Now, zoom out. By the end of the war, the Allied powers had spent more than $140 billion. The Central Powers had burned through around $60 billion. Humanity had never seen totals like that. These bills were larger than the entire pre-war national incomes of the countries involved. This was debt on a civilizational scale, and it did not just sit quietly, it blew up the old financial world. The gold standard, once sold as the sober backbone of global trust, was shattered. Inflation ripped through economies. Generations of savings vanished. Germany took the worst hit. In the early 1920s, the Weimar Republic slid into hyperinflation so extreme that by 1923, a single loaf of bread could cost billions of marks. People hauled banknotes in bags and suitcases. Some burned cash to stay warm because paper money was cheaper than firewood. Wages were paid twice a day because money lost value between sunrise and sunset. Who suffered? Workers, pensioners, widows, shopkeepers, veterans living off small savings. Ordinary people. the people who could not move assets overseas or buy foreign currency, and who survived relatively well, the connected elite. Wealthy families shifted money abroad, bought physical goods, and stayed close to power where information moved first. The rule was simple and cruel. In any financial war, the small saver bleeds first. Now, bring this forward to the present. World War I was the moment governments discovered something dangerously addictive. They learned they could detach money from physical reality whenever they declared an emergency big enough. They learned they could suspend gold, flood the system with new paper, borrow across borders, and sell it all to the public as duty and patriotism. They learned they could promise, "This is temporary, the fundamentals are sound," even as their own currency rotted. If that sounds familiar, it should, because that playbook keeps coming back. The emergency policies of the 1930s, the inflation waves of the 1970s, the global financial crisis of 2008. Every time you hear a calm voice say, "The system is stable," remember 1914. People back then were told to trust the system. Then they watched the money in their hands die. When the guns finally went quiet in 1918, the map of power had changed forever. Before the war, the United States was mostly a borrower on the world stage. After the war, it was the world's top lender. America ended the conflict with the largest gold reserves on Earth and huge claims on Europe. Britain owed billions. France owed billions. Smaller allies owed money too. Europe, which had once controlled world finance, was drowning in IOUs. London had been the global financial capital. After the war, Wall Street took that role. But that new order came with a trap. When wars are funded with borrowing, peace becomes a second war over repayment. Britain and France had sold bonds to their own citizens during the fighting. Those citizens now expected to be repaid. So, politicians in London and Paris said, "Germany will pay. Germany will cover the cost." The Treaty of Versailles demanded reparations of 132 billion gold marks. It was meant to punish, humiliate, and shift the pain onto the defeated enemy. There was one problem. Germany could not realistically pay. Every attempt to meet those reparations, printing money, shipping goods, begging for emergency loans, wrecked Germany's economy even further. Hyperinflation in 1923, when people carried wheelbarrows full of nearly worthless notes to buy bread, was not some random tragedy. It was the direct result of trying to squeeze a ruined country for impossible payments. That humiliation created rage. Extremists later weaponized that rage. Meanwhile, Britain tried to restore its old financial prestige and nearly suffocated itself. In 1925, the British government forced the pound back onto the gold standard at its proud pre-war rate. The message was, "See, Britain is still disciplined and mighty." The reality was ugly. Post-war Britain was weaker and deeply indebted. Pegging the pound that high made British exports expensive, crushed industry, and drove unemployment. It is remembered as one of the great economic self-inflicted wounds of the century, and again, ordinary workers paid the price while elites defended honor. Then look at the United States, now sitting on piles of gold and IOUs, facing a strange question. What do you do when the whole world owes you, but the whole world is broke? The American answer in the 1920s was to lend even more. U.S. banks pushed fresh loans into Germany. Germany used that money to send reparations to Britain and France. Britain and France used those flows to service their debts to the United States. On paper, it looked elegant. Money moved in a circle. New York to Berlin to London and Paris and back to New York. But underneath, it was fragile. It was like paying one credit card with another credit card. The entire system depended on constant new lending. When the world economy stumbled at the end of the 1920s and the Great Depression hit, that circle snapped. Loans dried up. Payments froze. Political anger exploded. Extremists gained ground. The world had never been more financially interconnected, and it had never been more brittle. So, what does this mean for you? It means World War I was not just trenches and gas masks. It was a turning point in how states use money as a weapon. Governments learned that they could call debt patriotism. They learned they could sell bonds as acts of loyalty. They learned they could quietly drain citizens through inflation instead of openly raising taxes. They learned they could turn economic pain into a story about national duty. And we are still living inside that logic. Today, central banks tell the public that inflation is temporary. Politicians raise debt ceilings again and again and call it stability. New money is created digitally at the push of a key and injected into the economy under words like support, stimulus, or rescue. You are told not to panic. You are told the experts have it handled. That tone is an echo of 1914. The technique has barely changed. Shift the cost of crisis onto ordinary households through higher prices and wages that never quite keep up. Here is the part you cannot ignore. Once money is no longer tied to anything physical, it stops being neutral. It becomes a steering wheel in the hands of governments, central banks, and major financial institutions. And they will always steer first to protect themselves. When the next emergency hits, war, banking panic, recession, whatever label they use, they will find a way to fund it. They will borrow. They will print. They will redefine rules. And after the smoke clears, they will send the bill to you through taxes, inflation, and the slow erosion of savings. Real wealth is not just a number on an app. Real wealth is resilience, knowledge, and the ability to see the pattern before it is announced. Real wealth is refusing to confuse currency with safety. History does not copy and paste, but it does rhyme. The playbook drafted in 1914 has been reissued over and over, only with updated branding. The slogans change: support the troops, economic stabilization, quantitative easing, cost of living relief. The structure does not. Spend now, soothe the public, promise discipline later, push the real cost onto ordinary people. So, hold on to this. Never assume money is safe just because it exists. Never assume the system is stable just because someone in a suit says the word stable into a microphone. The truth is almost never in the speech. The truth is in the balance sheets and the debt schedules. If this changed how you see the past and the present, stay with us. History is not nostalgia. History is survival training. Learn it. And you stop being the person who quietly pays for somebody else's bailout, somebody else's crisis, somebody else's war. One final reminder. Before you turn off this video, understand that financial warfare is not ancient history. It is running right now in your taxes, in your rent, in your grocery bill, in your paycheck that buy less stuff each year. The tools look cleaner. They're digital, regulated, well-branded. But the script is identical. Declare an emergency, change financial rules, tell people to stay calm, then send the invoice back to the public later. Don't forget that. Don't ever forget that. Stay aware, stay sharp.